All right, let's talk about Blackstone's Q4 2025 earnings call. This thing was a real head-scratcher, a textbook case of a company posting huge numbers, only to see the market just shrug its shoulders. We're going to get into it.
So here's the big question, right? What is going on when a company absolutely crushes it? Management is talking up a storm about the future, but investors? Yeah, they're hitting the sell button. That's the puzzle we're putting together today. So first, let's just lay out the two big, conflicting pieces of this story, the beat and the drop.
Okay, look at this. When it comes to distributable earnings, which is a super important metric for these guys, Blackstone didn't just meet expectations. Nope, they blew right past them. Wall Street was looking for about $1.54. Blackstone came in at $1.75. That is a clean, no doubt about it beat.
And yet, this is what the market had to say. The stock finished the day down almost 3%. So you have this fantastic quarter on one hand and a big thumbs down from investors on the other. So what on earth did management say that just didn't land?
To really get what the market was thinking, we have to first understand the story management was trying to tell. And believe me, they were painting a very, very rosy picture.
And you gotta love the language here. The president, John Gray, he didn't just say, hey, things are getting better. No, he said the deal environment has reached escape velocity. That's not just an improvement. That's a metaphor for a powerful, self-sustaining liftoff in their business. He's saying the engine is lit.
And they built that case on some really solid points. They talked about a huge pipeline of IPOs, basically signaling that 2026 is going to be a massive year for cashing in on their investments. They're still raising money like crazy. Get this, over $71 billion in just one quarter, which means more fees. The message was clear. We're ready to start selling.
And this is the bedrock of it all, just sheer mind-boggling scale. Blackstone is now sitting on $1.275 trillion in assets. That's trillion with a T. It just shows you how dominant they are. But their bull case wasn't just about being big. It was about being smart about a very specific trend.
And that brings us to what management sees as their secret weapon for the next decade, the AI revolution.
And again, listen to the words. This isn't just another trend. They're calling it a generational opportunity. Now, the key thing to understand is that for Blackstone, this isn't about throwing money at the next hot AI app. No, it's about building the entire physical world that AI runs on.
So what does that actually look like? Well, we're talking about massive investments in data centers. Their company QTS is a perfect example. We're talking about the power plants needed to juice up those data centers and all the other digital plumbing that makes it work. It's the ultimate picks and shovels play for the AI gold rush, and they think they can make a fortune funding it.
Okay, so after hearing all of that, you'd think the stock would be soaring, right? So let's get into the big question. Why wasn't Wall Street buying it?
This right here, this is the entire story in one slide. On one side, you have management talking about this incredible long-term vision, cycles turning, AI, a huge IPO pipeline. But the market? The market is looking at its watch. It wants to see cash, now. It's saying, that's a great story for next year, but show me the money today. It's proof over promises.
And you can literally see this tug-of-war playing out in the trading data. The volume on the stock shot up 77% on earnings day. This wasn't just a quiet drift downwards. This was a loud, high-volume argument between the bulls who believe the long-term story and the bears who are demanding those short-term results.
And you have to remember the backstory here, too. This drop didn't come out of nowhere. As you can see, the stock has been a pretty serious underperformer for a while now. So you could say that investor patience was already running pretty thin. A report that was good, but not good enough, was pretty much destined to get punished.
All right, so let's put on our analyst hats here. We've seen the earnings beat, we've heard management's story, and we've felt the market's skepticism. What's our call looking ahead?
So here's our forward call. First, we think the fundraising machine keeps humming along, but that's not what matters. All eyes are on the realizations. When do those big IPOs actually happen? Second, because of that, we think the stock is probably going to be stuck in a range for a while. This has become a classic show-me story. The stock won't move until the cash actually shows up. And that leads us to our final rating.
We're initiating with a market perform rating. It's really a story of two competing forces. You've got this incredible long-term AI strategy, but it's balanced against the very real risk that it just takes too long for the market's taste. It's a stalemate for now. Now, before we go, here's a little food for thought. An outrageous but plausible trade idea. Think about a pairs trade. You go long Blackstone, but you short a traditional commercial real estate ETF. Why? Well, this isn't a bet on all of real estate. It's a very specific bet on Blackstone's focus on AI infrastructure like data centers and against the old-school office buildings and retail centers that are dragging down those traditional funds. It's a way to play the new versus the old.
And of course, we gotta say it, remember, this is all just for informational purposes. It is absolutely not financial advice.